It's 9 a.m. here in New York City. I'm Brad Smith alongside Madison Mills this morning. This is the Morning Brief, and we're covering breaking and developing news on this Monday morning.
We begin with our top story, the assassination attempt on former President Donald Trump. These images likely to define this election cycle and certainly the Republican National Convention that's kicking off today.
That's right. Investors are digesting what impact the failed assassination attempt on Trump's life could have on market volatility and geopolitical risk. Stock futures are on the rise this morning ahead of a big week of corporate earnings. You've got Goldman Sachs out with Q2 results this morning, beating estimates, and we're taking a look at shares of GS. We've been tracking that. Was largely flat here, some fractional moves, and right now it's up by about 0.7%. We're also tracking more of the market moves this morning. The U.S. dollar particularly, that is on the rise right now, flat, just barely up, but is in the green. And then BTC, yes, BTC USD, we're tracking that. It's rallying. It's just under 63,000, up about 5%. Of course, that is a 24-hour move there. And then there's a look at DJT, Trump Media and Technology, rising up over 50%.
Yeah, certainly a huge move on that stock. But moving back to politics here, President Biden speaking from the Oval House on Sunday night, calling for unity. Let's take a listen.
You know, the political record in this country has gotten very heated. It's time to cool it down. We all have a responsibility to do that. But politics must never be a literal battlefield, or God forbid, a killing field.
The president ordering an independent review of security measures at the rally where former President Trump was shot. Congress is going to investigate that attack.
That's right. Former President Trump traveled to Milwaukee Sunday. That's where the RNC, the Republican National Convention, is kicking off Monday. Trump posting on Truth Social Sunday saying he was going to delay his trip after Saturday's events, but decided, quote, "I cannot allow a shooter or potential assassin to force change to scheduling or anything else," end quote. Law enforcement says no changes have been made to security for the RNC. Trump is expected to deliver a speech at the conference Thursday. We're also expecting an announcement regarding the Trump pick for vice president at the convention.
That's exactly right, Brad. Well, we are going to bring in Yahoo Finance's Rick Newman to talk about what is happening next here and the potential impact this could have. Rick, thanks so much for joining us. Obviously, a very unexpected weekend in terms of the developing events for both campaigns here. What is your initial reaction? What are you hearing from folks who you speak with about the change that this could have, particularly as we enter this week at the RNC? What change it could have, an impact it could have on the tenor of conversations at the convention?
I think it's going to certainly change things this week, next week. I'm not sure how much of a difference this makes long term in the overall political campaign, but a couple things we know are going to be different this week. First of all, the Biden campaign has pulled a big package of ads that were supposed to attack Trump and really try to counter-program the Republican convention. So that is not going to be happening. And Trump has a whole new narrative here. I mean, it's really kind of unbelievable how this failed assassination attempt actually plays into Trump's narrative of the candidate who is under attack. Now he's literally under attack, and he is playing it really well, I have to say. I mean, he had the presence of mind to stick his fist up in the air while the Secret Service was stuffing him into a car on Saturday, what we just talked about. He's now saying, I was going to take a couple of days to recover, but now I'm not going to let anything stop me. I mean, he could not have scripted this better himself, to be honestly. I'm not saying he did script it. I'm not one of the conspiracy wackos out there. But it's going to, for sure, change the tenor of the campaign this week, and it's going to change what anybody who actually is tuning into the Republican convention is likely to see. I mean, Trump has superhero status among his supporters now.
Yeah, you know, even the non-conspiracy wackos out there had enough fodder for conversation as Stage was trending on X over the weekend. We saw that. We also know that this shifts towards the convention. This shifts towards who he might pick as his VP candidate. What are the estimations? What's the calculus there?
I mean, I guess we have four people, and nobody knows what what Trump's thinking. I mean, Trump possibly made up his mind a long time ago, but he's been milking this for all the publicity he can get. It's Doug Burgum, the governor of North Dakota, Marco Rubio, the senator from Florida. Could be somebody else, but watch one of those guys. So what's going to happen with the vice presidential pick? It's going to be a 24-hour news story, and then I'm not sure too many people are going to care. And just to put some context on this, I mean, a lot of Americans are on vacation. They're not going to watch the Republican convention. They're not going to watch the Democratic convention. Certainly, everybody has heard about the assassination attempt on Donald Trump. A lot of people are just not paying detailed attention to this, and they won't be until September or maybe October. So, we've had two surprises in this election so far. One is Biden's moribund debate performance on June 27, although some people say that they weren't that surprised. Now the second one is an assassination attempt on Donald Trump. We could have more surprises. That there is more volatility, more likelihood of something unexpected happening in this race than I think you would normally have in a presidential election.
Well, Rick, that volatility is exactly what we're going to continue to talk about, particularly in terms of the market impact. So thank you for teeing that up for us and joining us. We appreciate it as always. As I said, investors looking to digest the potential volatility to come as the election continues to unfold. Heading into the market open today, the Trump trade gaining momentum. What exactly is the Trump trade? Well, right now it's looking like a couple of different assets. For one, we've got Bitcoin moving up over 5% over the past 48 hours here. Then we've got shares of Trump Media and Technology, ticker DJT, surging up over 52% right now in the pre-market. Joining us to discuss the impact on the race to the White House and financial markets, we've got Terry Haynes, founder of Pangea Policy. Terry, thank you so much for being here with us. I know that you say to be wary of the Trump trade. What do you make of the degree of upside movement that we are seeing in what we are sort of loosely referring to as the Trump trade right now?
Good morning, Madison. I think there's a great deal of sentiment involved in this, and most likely egged on by betting and prediction markets. And that's fine. I mean, markets trade on sentiment all the time, and those sorts of things. But in terms of long-lasting impact, or long-lasting in markets these days is maybe this week, but long-lasting, I'd really watch out for it, because prediction markets don't bear any resemblance to what's actually going on the ground, where the polls are so tight and remain so tight that over the last month, Biden went from one point down in the two-way kind of poll of polls to 3 points down, even with all the travails he's had. And since I wrote that yesterday morning, it tightened up a little bit further to about 2.7%, whether you're looking at the two-way or the five-way. So, prediction markets can say as they wish, and certainly Trump probably gets a little bump out of his convention, but then most nominees do. Bottom line, though, is the political side of this is pointing at the prediction side as saying this isn't going to last.
It's interesting, Terry. We've got, a little bit more of the insight coming out from UBS. And of course, we've been tracking the movements in their own election watch and their prediction as well. All the scenarios of whether it be a Democratic sweep or a Republican sweep or, logjam in DC, all of that and the above. But the question that they have here this morning, and their election watch co-head, writing to us saying the question to ask is whether the attempted assassination on former President Trump will affect the election prospects for him, and beyond that, the impact of the election on policy and markets does not change. I want to get your anticipation of the anticipated impact on policy and markets, and what investors should be thinking about.
Sure. Thanks, Brad. A couple of things. One is that I think the assassination attempt certainly has a short-term positive impact for former President Trump's prospects. I don't think it has a long-term prospect. I mean, I raised the Biden matter in part because, this was a seismic event in political terms, but yet it didn't have much impact on how people think about the election, which is saying something. And there are bad assumptions all over the place. One bad assumption is that, Biden voters will move to Trump. Not only is there no evidence of that, but there was polling done right before the debate that showed that Biden voters, even ones that were marginal Biden voters, really wouldn't move to Trump under any circumstances, and we really haven't seen a huge move towards Trump. I don't think we're going to see it now either. The logic of this doesn't match up. Just because somebody was almost shot and killed, a terrible event, that does not mean that voters are going to be that much more likely to vote for somebody who they know as well as Trump and whose unfavorables are as large as Trump. Beyond that, I don't think what you're going to see is a policy shift. I think you're going to see a perception policy shift. You're going to see a situation where the Trump in markets looks much more normalized, and that's the impact of endorsements, including people like Ken Griffin and the like. I think folks start to see that the Trump presidency is going to be very much more business-like than disruptive. Finally, what really matters is not just Trump, not just Biden as the president. What matters is the whole of Washington. And the base case today very much is for a split political Washington, with one house, the lower house in this case, being Democratic in 2025, and the upper house, the Republican Senate, being marginally Republican in 2025. Wall Street is enamored of sweeps. They were enamored of a blue wave in 2016, and the opposite happened. 2020, they were blue wave, and that didn't happen. But barely it happened, enough to do a couple of things, but not much more. And now you've got a divided world, and and they were all red wave in 2022, and that didn't happen. So as far as the major banking houses, I'd put a brake on the enthusiasm.
You mentioned Ken Griffin. We know that he and Paul Singer met with Trump about fundraising efforts before this event. And then, of course, you had Elon Musk and Bill Ackman voicing their support for the Trump campaign following Saturday's events. To what extent do you think that the attempted assassination takes the muzzle off of some Wall Street voices and executives who wanted to support Trump publicly but were waiting for a moment where it was appropriate to do so?
Well, I think it's a really good question, but I think what matters more is for them is the steady work that Trump has done over the last several months to show and convince the business world, including a recent trip to Washington to see the Business Roundtable and others, that his presidency is going to be more normalized and less disruptive. So I think that matters, and that matters a lot for Trump, frankly, because what he's dealing with in his own party is still a split party, where you've got 20 to 40% in the primaries not voting for Trump. So you've still got a lot of wariness among core Republican voters, and he's not reaching out and appealing to independents that much. He's underwater with independents right now. So he needs to fill both of those gaps. And frankly, business endorsements help a little bit in that regard.
All right. Terry Haynes, who's the founder of Pangea Policy. Terry, great to get some of your insights and perspective. Thanks so much for joining us this morning. Thanks. Trump media shares surging following the assassination attempt of former President Donald Trump at a rally in Pennsylvania. On Saturday, Trump is the firm's majority shareholder right now of DJT, and they're taking a look at shares. They were up as much as a little more than 70% or pre-market, but still higher by about 55% right now. And this has essentially been one of those tickers to track as a proxy for support for former President Trump, given his holdings in the business. And as we've continued to see in some of the financial holdings, it's not the healthiest business and still has a lot of ways to go to really satisfy some of the ambitions that more fundamental or traditional investors that would be looking under the hood, looking at profitability and the pathway to profitability sustained would typically require. But as it stands right now, for those who don't want to buy a hat, you can buy shares of DJT for about $10 less.
It's important to note for investors listening who want to know how to position their portfolios surrounding the election cycle. And this is certainly one of those names that gets an upside boost around any election movement, to your point, Brad, that is in favor of the Trump campaign. We're looking at a name, DJT here, that is up over 76% year to date. And as we've been talking about throughout the show, this is part of the broader Trump trade. What does that exactly mean? It means you're going to see DJT moving to the upside. You're going to see Bitcoin moving to the upside. You'll also see the Treasury curve steepen as it's seen as a hedge against any inflationary pressures that a Trump presidency could mean for the broader economy. That's why you're seeing that movement in the Treasury space. And of course, upside pressure on the dollar, as the former president we know has spoken about some tariff policies, which could lead to a bit of a melt up in the US dollar as well.
Absolutely. Much more. We're just getting started here on Morning Brief. More big bank earnings coming out this morning as Goldman Sachs topped estimates in the second quarter. We'll speak with an analyst on the other side of the break. Stay tuned. Plus, Macy shares plunging after announcing it has ended buyout talks with Arkhouse and Brigade. We've got more on that later on in the show. Plus, the aforementioned Bitcoin, as you just heard Maddie mentioning, that is on the rise. It's up by about 5%, rallying as more traders bet on a Trump presidency. We'll speak with a panel of experts later on in the hour. We've got all this much more. You're watching Morning Brief. More big banks out this morning with earnings. Goldman Sachs topping estimates in the second quarter after its profit rose from a year ago. The big banks saw revenue climb 17%, including a 21% jump in investment banking fees year over year. For more on these results, let's bring in Devin Ryan, who's the Citizens JMP Managing Director and Director of Financial Technology Research, joining us now. Great to have you here with us this morning. I just want to get your kind of read and an analysis, perhaps more broad strokes of what we're seeing coming out early in this earnings season with regard to banks, and if there's kind of a through line that we're able to draw thus far.
Sure, happy to, Brad. I think first off, just starting with Goldman, since they just reported really nice quarter. We were expecting them to report some improvement in revenue year over year. They had a 20% increase in investment banking, a little bit over 10% increase in trading. And so I think that's kind of the common thread. The capital markets businesses have been very good. Equity markets have been higher thus far this year. And so anything tied to fee businesses as well, like asset and wealth management, are doing quite well. And Goldman saw record results there in their management fees. And so I think those are kind of the common threads. I think you take a step back, a little bit more mixed trends for banks on net interest income. And that's something that we're continuing to watch, kind of still the movement around funding costs. But overall, I think it's been a pretty good start to earnings season. And really the capital market-centric firms are shining. And I think we're still in the early days of a recovery in capital markets. So good to see the start, but I think there's a lot more to go here as you look out in the future quarters of this year and then really into 2025.
Well, as Goldman recently announced this $20 billion private credit fund, and to the point that you're making, Devin, is the private asset management space within these banks positioning and deciding the winners here? Are the banks that have private asset management really building out and prioritizing that? Are they the ones that are the winners this cycle?
Yeah, Madison, it's a great question. And we actually just wrote a report about this last week where we highlighted that Goldman Sachs, some of the parts could be worth $565, in our opinion, relatively conservatively. And a big piece of that was coming from the alternative asset management part of their business. So Goldman's raised about $300 billion of alternative assets since the end of 2019, which is huge. It puts them in the top 5 of all kind of public alternative asset managers. And we think that's going to be an increasingly important part of their story. Only 60% of that money they've raised, all their alternative assets are fee earning. But what happens is once those get invested and then start to earn incentive income when those investments start to generate good returns. There's kind of huge upside there. And so that's really beneficial both to earnings power, but also to the valuation of the business. And so that was what we highlighted in a report. I think some other companies are doing this. And then there's a much broader theme going on around private credit and how these firms are leaning in into the markets. And banks are working with some of these private credit firms as well. And so it's not all competition. I think there is opportunity for banks with private credit as well.
Devin, when you think about the fixed income parts of these businesses as well, I mean, fixed income that came in higher than the estimate, I mean, it's pretty much to be expected though, right? As you're looking at no rate action in the US. So how far out are you gaming the fixed income parts of these businesses to remain at these elevated levels, at least compared to estimates or year over year, until we get that pathway of rate cuts that really becomes clarified or solidified?
Yeah, I mean, it's fixed income and equities too, trading have been more resilient than we would have thought heading into the year, and really even over the past couple of years have been operating at terrific levels. I think you have to look at it kind of in the absolute sense and think, there's what is the wallet share doing? And we still see room for growth in the overall wallet of fixed income, especially as you start to think about the issuance market is opening back up, as M&A opens back up and you start to get financing around these deals. That creates a more active primary market, but that then spills into trading as well. So I still see room for that to expand. And then if I look at Goldman Sachs specifically, we highlighted this in a report last week as well. They've gained tremendous market share in their trading businesses, and their entire global banking and market segment has increased market share by 350 basis points over their large bank peers since David Solomon took over. So a lot of that's coming from trading, and some of that's the market share gains with clients, but then also leaning in on financing. So that's been a big theme for Goldman to really increase their durable financing revenues, where in their prime brokerage, they're lending money to their clients. And so that's been a big opportunity for the firm. So they're gaining market share and growing faster than the market, but it is a good part of the market. And I actually think there's room for it to grow, even though it's been more resilient than we would have thought a year ago.
I want to switch gears a little bit while we have you, Devin. Coinbase shares are moving higher this morning on the back of Bitcoin's rally, and that broader Bitcoin rally coming off the heels of the attempted assassination of former President Trump. We've got Coinbase shares moving up about 5% in the pre-market trade here. To what extent do you think that there is more upside room for some of these crypto and Bitcoin adjacent names, or is this a day of story that's going to start to fade out here?
Yeah, I think there's a lot more upside. It's really kind of what's your time horizon. We're still in the early innings of this entire space. And so, firms like Coinbase, in our opinion, they're going to benefit from the exchange function, trading of various cryptocurrencies, but really, the adjacent businesses where they're building the infrastructure for being a player in remittance and payments and Web3. They have their own blockchain called Base. And so, when you have days where Bitcoin's price is up, people get a little bit more enthusiastic. There's been some noise over the last few weeks. There's been some selling pressure from Germany and some other areas where I think that's created some volatility, and that looks like that's on the other side. So some of this is enthusiasm around, I think, potential Trump administration. Some of it is just other dynamics going on. But I think you take a step back, longer horizon here, we're still very constructive. I just think that with potentially what's going on with the Trump administration coming in, or just more bipartisanship, even if that's not the outcome here, there's just a lot more bipartisan push here because people realize this has become an important voting dynamic for the electorate right now.
Yeah, both sides of the aisle certainly trying to get their talking points right around cryptocurrency. Devin, thanks so much for taking the time here this morning. Appreciate it.
Great seeing you both. Thank you.
Good to see you too. Devin Ryan, Citizens JMP Managing Director and Director of Financial Technology Research. All right, there you're looking at shares of M this morning. Macy's shares are plunging after announcing its board has unanimously decided to end talks with Arkhouse and Brigade, who had been looking to take the retailer private for about $6.9 billion. Macy's saying in a statement that the proposal, quote, lacks certainty of financing here. Shares moving lower pre-market right now, Maddie.
Yeah, it's interesting. This is a unanimous decision from the board, and this began with a $5.8 billion offer from the investor group back in September. This is, again, the talks between Arkhouse Management and Brigade Capital Management on that buyout proposal for Macy's. I do want to mention that we're seeing some sentiment movement in the broader retail space. You're looking at shares of Macy's right now down over the past 5 days. We'll get that adjustment after the amount of sinking that we're seeing right now. I bet it's down a little bit more than 2% over the last 5 days at the moment. moment, but you're also seeing shares of Nordstrom and Kohl's sinking to the downside off of this news here. Now, again, as Brad was mentioning, Macy's saying that this revised offer that they got in from Arkhouse and Brigade lacked compelling value, and the company is going to embark on their own turnaround plan. Obviously, Wall Street not having a lot of faith in their ability to have that turnaround plan in their own hands moving forward here. Also, the company mentioning in a statement on Monday that their financing commitment letters accompanying their revised offer were insufficient to give the board confidence to move forward with this potential deal. And remember, this comes after there was a revised offer that was a little bit higher. We were looking at $24.80 a share. That was up from $24, which was the number that Macy's had previously said was not compelling. Adding 80 more cents per share, also not compelling.
Yeah, just a question of how transformative this business could be with or without an acquisition or some type of partnership on equity side to take place and really institute some of the pilots that Macy's has already set into motion, also capitalizing on the success that they've seen in that Blue Mercury or little luxury side of the business on an extended scale. But they're also trying to test out these new types of locations where it's more trimmed in the store count, or at least the square footage operation, and the mix of product as well.
Yeah, a really good point. The product mix is critical. Another retailer struggling, though, as of this morning. We've got Burberry shares plunging after announcing the departure of its CEO, issuing a profit warning and suspending its dividend. The luxury retailer saying it's operating amidst a backdrop of, quote, slowing luxury demand. And European luxury stocks already showing some broader signs of struggle as we really just start to kick off Q2 earnings cycle here. It's not just Burberry. We also saw Swatch's sales and profit falling, Lufthansa falling on Friday here, Norwegian Air, a lot of these stocks in the European space having a little bit of difficulty here. But I think what's really interesting about Burberry is the fact that it is this luxury retailer. And the degree of downside that you're seeing, down 17%, plus that CEO ousting, I think says a lot.
Yeah, I mean, this reaction is totally warranted. When you have a company coming out saying the weakness we highlighted coming into the fiscal year 2025 has deepened, and if the current trend persists throughout the second quarter, they expect to report an operating loss for the first half. Now, they're saying in light of current trading, they've decided to suspend dividend payments as well. Not good for dividend investors out there. Whether you're in the business of wellies or not, you got to look at these results as nothing less than shocking or breathtaking in a bad direction here. And they expect the actions that they're taking indeed with some of these cost savings to start to deliver improvement in the second half, but we'll see how quickly that takes place. So ultimately, that's the business of Burberry.
Absolutely. Well, we are just minutes away from the opening bell right here on Wall Street. We're going to be taking a look at the biggest market movers, so stick with us. That's right after this break.
All right, there you're taking a live look at the opening bell on Wall Street. We've got some funfetti at the Nasdaq. Whole Foods, or Whole Paycheck as they're known in Brooklyn. They're ringing the opening bell there. Great assortment, a lot of food, a lot of other things too. Hey, you've also got Ben Creek, BCUS ringing the opening bell at the NYSE. All right, a lot of great folks on both sides there kicking off today's trading activity. And there you're taking a look at the S&P 500. As of right now, we'll just toggle this back over, recalibrate that. The S&P 500 holding on to gains, or starting off the day with gains of about 0.5%, 0.7% for the Dow Jones Industrial Average, and the Nasdaq Composite starting off the day in positive territory too. Should we take a quick look at, oh yeah, you got the Russell loaded
Well,
up
I was going to pull up the Russell just because it's interesting. We're starting to see a little bit of this rotation narrative starting to pull out. Thank you, Brad. As you can see, the Russell really getting a lift over the past week here. That's what that big old line is. And that's interesting given this question mark we've had about whether or not this earnings cycle is going to lead to a little bit of rotation. You can see that continuing as the market opens right now. But we're going to get to the real good stuff with Yahoo Finance's very own Jared Blickery for a look at what's moving this morning. Hey, Jared.
Hey, Maddie, the real good stuff, Bitcoin. We got a broad risk-on rally, so I thought we'd take a look at what's happening in crypto land because positive development here. Bitcoin, not only is it up 5%, that's the best day in a few months, but it has crossed back above 60,000. So let me just show you our year-to-date chart that I've been tracking for months here. And you can see we were in this consolidation. We broke down one time, it was a false breakdown, and then we headed a bit lower. And we remember the events that led to that. A lot of people are saying it is the German authorities over there releasing 50,000 Bitcoin that were confiscated, and this kind of flooded the market. But the good news is we saw over $1 billion in ETF buying from these from spot Bitcoin ETFs. And as the world awaits for the spot Ether ETF, I should add, it looks like the SEC has gone quiet. So it may not be this week. That's what it was looking like last week that it would be this week. May not be this week. But back to the main point here. We got Bitcoin above 60,000. And let me just show you the catalyst over the weekend on the assassination attempt on President Trump, or former President Trump. We did see this move up here, and that was kind of critical. And let me put my 5-day chart. It was critical because it passed an important price threshold. So let me see. There we got a 4-day chart, and finally here we go. Was able to push it above 60,000. Got there the next day, and then pushed above. So some positive developments for Bitcoin, but the rubber doesn't really meet the road until we get back up to about 73, 74,000, and then you got to break through those highs.
All right, Jared, excellent stuff there. Teeing up today's and this week's market activity. Appreciate it, Jared. Well, we've been keeping tabs on stocks this morning as we're seeing the major averages open up positive. Big week ahead for earnings. Can this week's earnings reports spark a broader market rally? To discuss, let's bring in Kate El-Hillo, who is the Russell Investments President and Chief Investment Officer, here in studio with us. Thanks so much for taking the time.
Absolutely. Great to be here.
So let's dive in. I mean, when we think about the early innings of this earnings season thus far, what are we anticipating for the broader theme to be, and how markets may react as well?
Yeah, well, I think the hope and what people are looking for is to see if we get this broadening out beyond the big tech, where the 30% kind of earnings, that comes down, that's okay. But whether it's from some of the CPI news last week, or and some of the riskier, higher indebted companies end up coming out a little bit better, like small cap companies, for example, or certainly start to look at the consumers as we go into earnings season. Like, is there there's more discipline probably in the consumer spending. You're starting to see a little bit more weakness, but they're healthy still. What's that going to mean for the consumer sectors, and what are we going to get from a forward guidance perspective? But we think that there's going to be a bit of a broadening out that comes through, and we're excited for the season to start.
Is that broadening out going to exclude some of those consumer names because of that pressure, or not yet?
We don't think yet. We think the consumer is still strong. I think it's looking for those forward signals and positioning for the second half of the year.
Mm-hmm. And on that, I know you have some great points in your note about consumer delinquency rates, things like that, just the struggle of that lower income consumer.
Yeah.
When does that become an issue?
Yeah, and I think that's the balance. You've got like the wealth effect helping kind of the mid to upper income. You also have the lagged effects of the tightening, because mortgage rates, for most homeowners are still quite low. And so we don't think that the spending is going to tail off that much, but you do have that lower, income, cohort that, is, struggling, and how much does that kind of flow through to the economy? We still think there's some more time before it, creates a bigger issue from an earnings perspective.
Yeah, low income cohort struggling right now, higher income right now, not buying Burberry, as we were just talking about a moment ago here. I mean, as we think about what the potential growth rate for companies and earnings specifically could be for the quarter, I was taking a look at some of the FactSet data. If 9.3% is the actual growth rate for the quarter, it's going to mark the highest year-over-year earnings growth rate reported by the index since Q1 of 2022.
Yeah.
What do we need to see and hear from businesses in order for that to come to fruition?
Yeah, we're right. So that's on the higher end too of our expectation, kind of at 9%. And you've come out of a period where you're out of an earnings, let's just call it recession for the non-tech companies. It just happened last quarter. So what do we need to hear is that you're still having the discipline around cost, and you're not seeing inflation's coming down, so you get the benefit there, but that the consumer is not seeing any type of tail off. So you are getting kind of that top line growth that you need to see. But if you add on to that, Fed cuts that are more, let's say, convincingly being priced in for September, that's going to be better again for some of the smaller cap companies or companies that just haven't participated in the rally. And so we think that will start to come through as we go through earnings.
How confident are you about September for the first cut?
We already were in line with a September cut. And so, last week, when we've had that 4 months now of, just like CPI, coming in, down after the first quarter kind of challenges. And so we think, September is likely, and then quarterly, shifts from there.
I want to get your take on the election before we let you go. Not the election specifically, but just, has there been any change in how you're thinking about positioning as it relates to November?
Yeah, well, I'd say the shock and historical event over the weekend, the markets are starting to react to that. We saw it happen after the first debate a bit, and I think this is getting a bit of a preview into what a Trump effect might be if we start to go down that road. I think it's still 4 months to the election, though, and so it's a little bit early to start to make a call. But it's good to see kind of how the market's going to think through the taxes, the tariffs, and some of the implications of a Trump White House, and then potentially even going further down into the Senate and the House. So positioning right now for us isn't changing, but it's helping us give an idea what the playbook would be as we start to get more certainty coming into the election.
What is that playbook, quickly?
Yeah, so it's steepening of the yield curve, right? And so you might still get the inflation coming down where you have the front end coming down, but concerns over inflation, stoking, taxes, tariffs, could create an opportunity there in terms of positioning. And then small cap, REITs, financials, certainly energy. Companies. If you start to get to a point where regulation's a bit lower, you also have just a shift in terms of some of the policy. There's some sectors that have been pretty unloved that should benefit.
All right, Kate Elhilla, who is the Russell Investments President and Chief Investment Officer. Great to see you, Kate.
Great. Thanks so much.
All your markets action straight ahead, everyone. You're watching Morning Brief on Yahoo Finance.
Well, many election polls conducted prior to the attempt on former President Trump's life showed Trump with a slight edge over President Biden. Now, many investors are considering how the events over the weekend and that attack might affect either candidate's chances of victory. Here with more, we've got IXIC Boltanski, BTIG Director of Policy Research. IXIC, it's always great to speak with you. I just want to start on what your conversations were like over the weekend. What were clients asking you and what were you telling them?
Sure. Look, after we got past that initial moment of shock, I think the conversations focused on trying to understand what the next few days are going to be like, and then how we should think about what this means for the 2024 election. And so I think the initial round was trying to get your bearings, because this isn't something that you see here, right? This is new for most investors and new for most of us. This level of political violence isn't something we're accustomed to. So trying to get our arms around what that means for society at large, and then trying to understand the 2024 election, because I really think there are two main implications from this from a purely political perspective. The first is Donald Trump was the favorite before this, and he's the favorite after this. And the second is, I think that Joe Biden will still get the nomination on the Democratic side. I think that the shift of attention away from the infighting in the Democratic Party to Donald Trump and to the RNC convention that's going on this week makes it easier for Biden to get that nomination in a couple weeks.
IXIC, what's particularly interesting is, and I wrote a story on this actually last year, talking about the number of executives that were anticipating a very vitriolic election season. And within that, you kind of got the sense that there was going to be less corporate donorship. There was going to be less playing in at least the top line of this general election. How does that also impact if you saw less from the corporate super PACs contributing into the top of ballot? How does that also impact what comes to fruition in November?
Yeah, look, I think first of all, we're still early. And so I think that there's going to be a lot more money that comes in after the conventions. And so I want to make that point at the top. I think that we will see a flood of large donations. I would just note that Ken Griffin, for example, has said he's waiting to see who Trump's VP would be before he commits to making any donations one way or the other. So we're going to see money spent. I'm not worried about this. They will have that continued. I think for me, what's notable here from the corporate side is that we have seen, I think, a shift, at least in sentiment, to starting to focus on down ballot races. And so on the Democratic side, for example, you've seen a step back from donations to President Biden's reelection, at least on a relative basis. And instead, those donations are moving towards competitive House races or even some of the very competitive Senate races. So the money will still find its way into politics. I don't think that's anything that's going to change. It's just exactly where it goes and the amount that I think can have some volatility to it.
Yeah, we've had a lot of guests on this morning, obviously talking about this and the potential increase this has in terms of the possibility of a red wave come November. If we do get a red wave, what does that mean for financial markets?
Yeah, look, I think there are a lot of ways to talk about this. And I think that we're already now going into sort of the second tier impacts. I think everyone understands, or at least has some understanding of the impacts that continued spending will have on bond markets. The Trump tax cuts would be reauthorized. I think we're getting our arms around that. My clients are starting to focus on sort of the second order, the next layer down ideas. And so one of those that we've focused on a fair amount is consolidation. If Trump comes in, you will see a change in the heads of the FTC and the DOJ's antitrust division. You'll have a much more hospitable climate for M&A. So what does that mean? I think that's positive for boutique banks like Lazard and Moelis and Evercore. I think you're also going to have more volatility, right? So that's something from a equity markets perspective that you can focus on companies that are exposed to more equity market volatility, like the exchanges, like Virtu and CBOE. I also think there's going to be a pronounced push to get Fannie and Freddie, the mortgage giants, out of conservatorship. That's something that you have seen not only Donald Trump focus on, but really the entire Republican Party has gravitated towards that view. So I think we're now, while we're all still trying to figure out the macro, because look, there are real puts and takes to a Trump 2 presidency from the macro side. My clients are starting to focus on more acute themes because those are areas that I think still have room to run.
How many of the themes are tied back to, even if former President Trump is saying that he didn't author Project 2025 and that plan, but there are still elements of that he looks to enact? How many of those themes are your clients trying to best decipher exactly where that would be either beneficial or actually a major risk to their portfolio?
Sure. I mean, look, we're all trying to get smarter on a constantly evolving situation. A lot of those themes, and even frankly, a lot of the GOP party platform that you're going to hear a lot about over the next few days, are things that aren't exactly investable one way or the other, right? There isn't much you can do on the Trump policy position that we shouldn't pay taxes on tips, right? That's a position that he is pushing in large part because it plays well in Nevada. Right. So that's not exactly something that you can have an investable thesis around. You can look at the GOP party platform and say, my goodness, this is darn good for the digital asset ecosystem. It's good for Bitcoin. It's good for all of the companies around there, from exchange like Coinbase to miners like Riot. So those are things that I think you can sink your teeth into. Whereas there's a lot in the party platforms and in Project 2025 that are about the culture war, and those aren't things that exactly lend themselves to investable ideas.
All right, IXIC Boltanski, who's the BTIG Director of Policy Research. As you mentioned, a lot of time between now and the election. We'll see how much weight these events continue to carry, historic as they are. Thanks so much for taking the time, IXIC.
Thank you.
Certainly. Well, as we were talking about there a moment ago, Bitcoin climbing above $60,000 as more traders bet on a Trump presidency. On the other side of this short break, we're going to speak with a panel of experts. It's next. Bitcoin rallying this morning, topping $60,000 as more traders bet on a Trump presidency following an assassination attempt on the former president over the weekend. Trump's campaign began accepting crypto donations back in May. He's also expected to speak at a major Bitcoin conference later on this month as he looks to reposition himself as a crypto supporter. For more on the state of the digital assets, we're joined by Lucy Gazmararian, who is the Token Bay Capital founder and managing partner. Plus, we've got Rob Chang, who's the Griffin Digital Mining CEO. Great to have you both here with us this morning. All right, so first and foremost here, just the price action that we're seeing in crypto right now. How much of that do you anticipate, Lucy, I'll go to you first, is tied back to former President Trump and the likelihood that he might be better for crypto traders or holders out there?
I think the idea that Trump is positioning himself as a crypto president, stems from before this latest rally, if you want to call it such. Bitcoin's rallied around 10% in the last 9 days. I was on here talking, 9 days ago, and we were saying, how low can Bitcoin go? And now it's actually looking a little bit more optimistic. Was it the FUD from the German government selling? Was it the FUD from this idea that the Mt. Gox trustee are going to start paying creditors back their Bitcoin, and are they going to sell? So I think those fears, the anticipation of those events has sort of passed by, and now we're already seeing healthy movements in Bitcoin's price. And as I say, it's already up 10% in the last 9 days. So I think it's less to do with President Trump and more just actually the main selling events that the market were concerned about, which was Mt. Gox and the German government.
Right, exactly. Our very own Jared Blickery was speaking about that earlier today as an initial catalyst. But Rob, I want to go to you on this idea of former President Trump being the pro-crypto candidate in this election. As a crypto executive yourself, do you agree that former President Trump is the more favorable candidate for crypto?
One presidential candidate. Well, of the two major parties, there's only one presidential candidate who's planning on speaking at the largest Bitcoin conference in the world. And that's coming up in a couple of weeks. We look forward to seeing him there. And that's certainly where he's positioned himself as being pro-cryptocurrency. And frankly, if we take a look at the past 4 years, there's something that we I guess fondly called Operation Choke Point, where the government has enacted various things where it has made things difficult for crypto companies. And so we do not expect President Trump or potential future President Trump to enact things of that nature, and in fact be more pro cryptocurrency and Bitcoin in particular. And we've seen that he's accepted cryptocurrencies as part of his donations, and we suspect that of the two candidates, primary candidates, he would be one of the more cryptocurrency positive ones.
You said there were less favorable policies surrounding crypto during the Biden administration. Like what?
Well, there have been certain things that we've noticed. For example, we've seen some bank accounts for some banks make decisions for risk reasons to shut down bank accounts. We've seen that several times. We've seen the shutdown of Signature Bank, which was probably the primary bank of many of the cryptocurrency players for various reasons, although many of us suspect that it's possibly also because it is a pro-cryptocurrency bank. And we've seen things of that nature go through the system, and it's made the lives for cryptocurrency. That was about the broader
banking crisis, though, correct? That wasn't a Biden administration policy.
It wasn't certainly a broader banking crisis issue, but we certainly believe that a part of the reason why Signature was taken down was also because it was a cryptocurrency-friendly bank.
Okay, that's interesting. I mean, especially given the run on those banks as well, and so they didn't have liquidity to ultimately ensure that they could insure deposits. So that's where we did see much of the consolidation effort that took place afterwards. So not necessarily tied to administration efforts, but trying to shore up confidence in the banking system, which actually brings me to this next question, which is what would the strength of the US dollar look like if there was a more favorable crypto first type of mindset from whoever takes office, and if that is former President Trump? Lucy, I'll go to you, and I want to give you a chance to respond as well, Rob.
Yeah, I mean, I think this is, it's the prime use case for crypto, which is stablecoins. And in crypto circles, there's always been confusion. Why is this not an opportunity that the US authorities, government have really seized? Because if they get the stablecoin, which is backed by the US dollar, into the hands of millions and hundreds of millions to billions of the global population who previously could not access the US dollar because they could not be banked by the US banking banking system, then that's an incredibly powerful position for the US government to put themselves in. So it's a big question mark in crypto circles why they haven't seized that opportunity and really to solidify its status as the world's reserve currency, because stablecoins are incredibly important. It's really the oil that keeps the whole crypto economy moving.
Rob, I want to give you a chance to respond as well here. What is the reality of if we can continue to see a surge in cryptocurrency asset holdings, then what does that mean for the US dollar here and the coexistence of the two in strength?
Yeah. Well, first thing I think the cat's out of the bag. I think certain cryptocurrencies, Bitcoin in particular, will certainly take its place as pretty much another currency in the world, just one that happens to not be associated with a particular government. That being said, I believe that the US dollar status as the reserve currency in the world will likely remain unchallenged. It just has yet another partner, so to speak, to work with, just like the British pound, the yen, and whatnot. And if anything, I think the US should really be embracing, as our colleague just said, the use of Bitcoin, because any country that embraces Bitcoin will have a leg up, so to speak, on the future of global commerce, where I believe that a lot of commerce will eventually be traded among cryptocurrencies. So countries that do embrace it will certainly have an advantage relative to those that do not.
All right, well, we've got to leave it there, but thank you both so much for joining us for this panel. We appreciate it. That was Lucy Gazmararian, Token Bay Capital founder and managing partner. We also had Rob Chang, Griffin Digital Mining CEO. Now, coming up, we're diving into the impact of political volatility on financial markets. We'll continue to cover that for you next on our show, Catalysts. It's just after 10 a.m. here in New York City. I'm Madison Mills. Let's dive into the catalysts that are moving markets today. We're looking at stocks moving to the upside here as second quarter earnings season is officially in full swing following those big bank earnings. And Goldman Sachs reporting this morning. But first, we're going to start with our big story, the assassination attempt on former President Donald Trump that took place over the weekend. This taking place as former President Trump is heading to the Republican National Convention this week, where he is expected to announce his vice president pick. Also, former President Trump gaining support from CEOs and executives on Wall Street. We had Tesla's Elon Musk and Pershing Square's Bill Ackman both posting their endorsements on X in the wake of the attack. So we will dig into all of this over the course of the next hour with you right here. But first, we're going to talk about the reaction that we're seeing today in markets moving to the upside as investors digest not only those Goldman Sachs results that I mentioned out this morning, but also the impact of potential volatility to continue this election cycle following that assassination attempt. So joining us now on this, we've got Michael Kelly, Global Head of Multi-Asset at PineBridge Investments. Michael, thanks for coming in studio with us. Really appreciate it. So I know that you have an interesting take on the potential of a soft landing, which I want to talk to you about, but I'm just curious about this weekend's volatility and the degree to which any potential upcoming unknowns to come could weigh on your economic outlook.
You know, I don't think so. The weekend, very, very sad and unfortunate, but how much will it change the trajectory of things? We don't think very much. There have been a lot of political trends, moving from austerity after the financial crisis to letting the purse strings go after COVID. We just see more of the same of that going forward. And, as long as that's the case, the die is pretty much set. You're going to be in a stronger dollar world. You're going to be in a stronger growth world. While inflation and real rates will come down a little bit, they can't come down too much because we're really going into run hot type of political policies in Europe, in the United States, and many places for a lot of common reasons. And actually, we even think, depending on the candidates, Biden or Trump, they would both keep the majority of these $5 trillion of tax cuts expiring. Biden wants to keep all those for people earning $400,000 or less, which is a big chunk of that number. So it's run hot or run hotter. And, the bond market isn't going to like that. The dollar is, the stock markets are.
Well, the Treasury curve is already steepening on the heels of this weekend. Do you think that that's the market pricing in what a Trump presidency could look like?
Yes, how durable it is at this juncture. Normally markets make those assessments after Labor Day. Now, usually the first debate is after Labor Day.
Right.
And you can't trust the polls until after Labor Day. It's still a little early, but yes, that's what it's about. You see a firmer dollar, steeper curve. That's the market's beginning to, at the very beginning of replacing how they're going to try to invest. Given this uncertainty of the election.
And you mentioned tax policy specifically. Is that the key policy to watch from your perspective that could impact markets, or?
Well, there's actually three big ones, which is, we're in a very tight labor market, and it's been alleviated by immigration. You can have all kinds of political views on immigration, but the tight labor market is being alleviated by that. So the two candidates have very, very different policies. Tariffs, they're more similar than dissimilar. It's a matter of degree. Taxes, as we said, it's a matter of degree. Regulation is a big divide. In the first Trump presidency, you saw a big rollback of regulation. It was quiet, but it was significant, and Biden has been advancing that. So that's going to be a big factor as well.
The Trump presidency could be a catalyst for more M&A.
Yeah, it could be a catalyst for more M&A, more aggressive investing by businesses, since they'll feel more confident that no one is going to come up with a new regulation that harms their cash flows.
How much does the Fed impact your thinking on that?
Well, the Fed, we're in a policy rate cutting cycle. And these are big moments in financial markets. And there's two types of policy rate cutting cycles. Those where the central banks stay behind the curve, growth is beginning to come down. It's time for the central banks to either get ahead of the growth slowdown, in which case you have a soft landing, in which case equities will do very well, bonds so-so, or you have a hard landing, in which case bonds will roar and stocks will come down hard. So it's very meaningful whether the Fed now steps forward, steps up, and begins joining the ECB and many other central banks. We think they will.
Real quick, you do think soft landing still?
Oh yes, yeah. No, it's basically central banks giving the confidence that while we're not super fast, we're on our way. And it's also the way you'll see small business reacting to an environment that may be less regulatory.
Right.
And those two things, finally inflation to the consumer is disinflating faster than wages.
Right.
So real spending power is starting to fortify itself. So those things are the fabric of the soft landing.
All right, Michael, we got to leave it there, but thank you so much for joining us.
Madison.
We really appreciate it. That was Michael Kelly, Global Head of Multi-Asset at PineBridge Investments. Well, investors still looking at the attempted assassination of former President Donald Trump and digesting how it could impact the election and policy going forward. Joining me now on this, we've got Tom McLaughlin, co-lead for Election Watch at UBS Global Wealth Management. Tom, it's great to have you on this. Appreciate you joining us this morning. I just want to get a gut check from you this morning about the weight you think that the events over the weekend are going to hold over the course of this election. How much staying power does this have?
Well, good morning, Madison. I think it has a little bit of staying power, but probably not quite as much as people may think this morning. In most of the circumstances, you'll see a little bit of a bump for the individual who's been subjected to an assassination attempt. We saw that in Reagan. We saw that in Ford back in '75. But it tends not to last. It could last 2 or 3 weeks, maybe a month. But sooner or later, we're going to get back to the overriding issues in this election, which will be issues, some of them which were identified by Michael, including things like the economy generally, regulation, certainly, the tax act that will have to basically be passed by Congress next year. So there are these overarching factors that I think will become more important over time.
Those overarching factors here, though, I wonder how much they impact the market heading into November, because we're looking at gains today, for example, but you could argue that that is more driven by the second quarter earnings cycle kicking up here than any sort of political volatility.
It could be, yeah, it could be that. It also could be a little bit of a relief in the sense that it could have been worse. I mean, we actually, sympathy goes out to the families of those who've been critically injured and the individual who passed away. But there's a relief in the sense that what is certainly a bit of a tragedy could have been much worse had the president actually just been killed, the former president. So we're looking at a situation where hopefully we get back a little bit more normal. We've got the former president appearing in Milwaukee, and when he does so, he'll go ahead, I expect, and basically call for unity and try to ratchet back the amount of virulent statements that have been made on both sides of the election. So I think to some degree we're looking at a situation where everybody's looking forward to a convention where there'll be calls for unity and kind of slowing down a bit on the rhetoric.
Well, it's interesting because we heard both President Biden and former President Trump using the same word over the weekend, which is unity. I'm curious from your perspective, how likely do you think it is that the speakers at the RNC over the course of this week are going to be able to continue that talking point of unity and potentially be able to bring in some voters who have been put off by the political back and forth and violence, frankly, that we've been seeing?
Yeah, the country is obviously very polarized at this point, and you see individuals on the left and on the right basically digging into their position. The amount of, or the number of voters who are completely undecided and are able to swing to one candidate or the other is diminishing, but they are the most important voters today, and those voters have to be in 6 or 7 states. So a lot of attention will be directed to those individuals who haven't quite made up their mind yet. I think the former president's reaction on the podium after he was shot will probably convince some voters. As to the convention itself, I think there will be a push to try to tone down the rhetoric so that the former president can basically, act as the future chief executive in the hope that he gets elected. And there'll probably be a number of quiet conversations with a number of speakers asking them to tone it back and ratchet it back a bit.
I want to shift gears a little bit and talk about the investor perspective for our audience, particularly retail investors listening in here. What do you think they should be doing in terms of positioning to prepare for November, given that this weekend really highlighted the volatility and the challenge of predicting what could happen in an election year?
Right. Yeah, Madison, we expect there'll be more volatility as we go into the fourth quarter. The fourth quarter in presidential election years do tend to be a bit more volatile. So for the individual private investor, it's coming, expect it, and don't get too distracted first. Secondly, remember that if you've constructed a well-reasoned financial plan with your advisor going forward, it doesn't necessarily need to change abruptly. And I'll give you a couple of examples. In 2008, we saw a lot of data that suggested that those who favored President Obama, former President Obama, stayed in the market and did better when the market rallied in 2009. The same thing happened 8 years later when those who basically supported former President Trump, when he was elected, they stayed in the market, the equity market, and they benefited from the run-up we had in 2017. So if the individuals might have been disappointed in 2008 or 2016 and reduced their exposure to the equity market, they actually would have underperformed. So we have to look at it and say, take everything, all politics with a grain of salt, stick to your plan, and don't basically get too distracted from the results in this election.
Final 30 seconds here, Tom. For investors listening who are looking for a safe haven here heading into the election, should they be looking at treasuries at the front end of the curve, Bitcoin, or gold?
Well, gold will basically be a protective mechanism. I wouldn't go all in on gold. That's probably not the right strategy, but a small allocation to gold will provide some resilience. I think a kind of a cross-asset barbell actually works pretty well, which is short-end treasuries, longer-end municipal bonds for the private investor who is subject to taxation, because most of your tax benefit is coming from the federal tax. So regardless of the state you're in, the cross-asset barbell, very short treasuries for a little while, but basically remember that you've got to have some longer dated, longer duration fixed income securities because they will benefit from the Fed policy.
Tom, we got to leave it there. Really appreciate your insights. Thanks for joining us this morning. That was Tom McLaughlin. He's co-lead for Election Watch at UBS Global Wealth Management. Now coming up, we're going to continue to have all of your markets action ahead, so stay tuned for more. You're watching Catalysts. Let's turn our attention to some trending tickers that we're watching on this Monday morning. Shares of Apple moving higher this morning following a slew of upgrades citing the potential of its AI software. Joining us now to discuss, we've got Wamsi Mohan, Bank of America IT and hardware analyst who recently raised his own price target on Apple. Wamsi, it's great to have you on to talk about this. I know you have increased confidence in a multi-year iPhone upgrade cycle, and that's part of what drove your price target increase. Talk to me about where that confidence comes from.
Yeah, good morning. Thanks for having me. Yeah, look, I mean, I think that we ran a survey which is fairly broad-based, covers 4 major geographic regions, and it's been a long-standing survey. We've been running this since 2018. It's very unusual for Apple to actually talk about future products and releases, right? Like they basically said iPhone 15 Pro and newer would be needed to run some of these Apple Intelligence features. So we thought the survey was going to be somewhat pertinent to see after Worldwide Developer Conference, did people actually change their decision to buy an iPhone in 2024? And we did see a meaningful uptick in the number of people who basically said, yes, we would like to upgrade our phone this year based on the feature functionality that Apple is introducing. So we think that this is going to be a start. We know obviously all the features won't be available to everyone at the same time. So we actually think of this as more of a multi-year cycle. Given that the survey also shows that the install base age is actually quite old. There's still a whole lot of iPhone 11s, 12s, and 13s in the install base. So we actually expect a lot of that install base to come up for refresh at the same time when all these new feature functionalities are starting to hit consumers.
Yeah, it was interesting the evening of the Worldwide Developers Conference. The stock really wasn't moving that much to the upside, and then you had a slew of kind of commentary surrounding it and the news of day, and that really led to some broader gains for Apple. So I'm curious from your perspective, where do you get clarity on hype versus actual excitement that's going to convert to sales regarding these iPhone AI features?
Yeah, absolutely. Great question. Look, I think that when Apple sort of tends to introduce products, they are really ready for the consumer, right? Like, so we don't see them jump the gun, not generally first to market, but at the same time, and we have a slew of already phones from Chinese competitors, from Samsung and others that have some of these AI features. So Apple's not first to the game, generally not, but when they do come, you have a high degree of confidence that whatever product they're coming up with is going to act extremely well. So now from a perspective of like, how much of this is hype versus reality, right? I think that when you look at the feature functionality, this is where you can start to think about a step function change in productivity. We all aim for so much productivity in our daily working lives and try to optimize, but really from an iPhone perspective, in our personal lives, we haven't had the opportunity to really capitalize on some of these productivity initiatives, right? And what I'm talking about is just, ordering at restaurants or going from place to place via Ubers. A lot of this stuff can actually be automated, but we go and jump across so many different apps to try to get just our daily routines in place. And so what I think is that, this is going to take some time to roll out, and they also introduced at Worldwide Developer Conference very deep integration with Siri. I think this is the part that really was not understood well by the broader community, is how deep this integration can go and what kind of changes that can bring. And I think that once people got comfortable with the fact that, look, I mean, Siri is going to be an assistant that you don't want to turn off as you wanted to in the past, but rather one that you would want on that can help you with all your features. I just think that we're entering a new paradigm over here where consumers are really going to see this increased benefit of productivity over time. And I think that that's really key to understanding this upgrade cycle. And as those features roll out over the next several quarters, more and more developers are going to integrate Siri even more deeply. It could start with Uber, maybe Lyft would follow. Right. You could see OpenTable or others start to integrate. So as you see that that snowballs into sort of this effect of people wanting to upgrade for all the feature functionality.
Wamsi, I'm sure you can understand we're spending a lot of our coverage today talking about the November election. And I'm curious from your perspective what you're thinking in terms of the potential regulatory impact of a re-entry of former President Trump back into the White House and how that could impact some of the big tech names that I know you look at, and particularly Apple. Have you started to price in the impact of a Trump presidency on Apple yet?
Yeah, it's an interesting question. Like, when we think about the broader political landscape, right, obviously there's a lot of uncertainty out there. We don't think stocks are pricing in a definitive outcome of any sort, given that we're still quite a far bit away from this. The way we think about Apple really is, what are the big drivers that could or couldn't change based on, whichever administration comes in? Some of that could be related to tariffs. Some of it could be related to lesser regulatory load. It could mean that the landscape for M&A could change. It could mean that the taxation regime could change. The amount of capital returns could change. So there are a lot of moving pieces still. I think that it's too early yet to sort of price all of this in, given that we don't really know the specifics around any of these yet. But what I would say directionally is that the fundamentals really support so much more of confidence in estimate growth that it's actually not going to matter too much who eventually gets, what's the outcome of the presidential election. I think it's a lot more important that earnings estimates are going to go meaningfully higher. And that generally is the way that we look at stocks and think that that is the direction that really stock prices tend to follow, is long-term estimate revisions. So we're very comfortable with our estimate revisions, given even all these uncertainties that exist in the environment today. And we think that there's still a lot of upside to those estimates, which is why we're bullish on the stock.
Wamsi, thank you so much as always for joining us. We're very grateful, appreciate it. That was Wamsi Mohan. He's Bank of America's IT and hardware analyst, joining us on his recent Apple price target upgrade. Now coming up, Judge Eileen Cannon dismissing President Trump's classified documents case in Florida. We're going to cover that breaking news for you more in depth when we're back. former President Trump's criminal classified documents case dismissed by a federal judge in Florida. That judge finding the appointment of special counsel Jack Smith unconstitutional. Trump was charged last year with taking classified documents from the White House and resisting attempts by the government to get those documents back. So here to discuss his latest thoughts on where things stand is American University presidential historian Alan Lichtman. Alan, thank you so much for being here. Obviously, I have a lot of questions for you about what transpired over the weekend, but I want to start with this developing news about the Trump classified documents case. Given your extreme expertise in American history and politics here, can you just put this into context for us, the significance of this developing news?
This is of enormous significance. It goes against more than 150 years of precedents with this country dealing with special prosecutors. We started with a special prosecutor in the 1870s to investigate corruption in the Grant administration. We had special prosecutors investigating the Teapot Dome scandal of the 1920s, the Watergate scandal under Richard Nixon, the Iran-Contra scandal under President Reagan, the scandal involving President Clinton's affair with a White House intern. It was a special prosecutor that prosecuted the president's son, Hunter Biden. Donald Trump himself appointed a special prosecutor to investigate the FBI and Justice Departments dealing with alleged Russian meddling in the election. So this is clearly a ruling that just goes against all of the thrust of American history. And special prosecutors have a critical role, as we've seen in all of these examples, because the reason we have them is to investigate very high-profile allegations outside of the political environment of the Justice Department. And this ruling once again shows that this judge is willing to discard precedent. You know, I can't say the law, but it certainly seems that way, although I'm not a lawyer, but she's been smacked down hard before. And why delay a year before making this ruling? And why do it right on the eve of the Republican convention?
Well, Alan,
this smacks of politics.
Let me jump in on that exact question and point that you're bringing up, which is the timing here. The Republican National Convention kicking off today, and of course the events over the weekend. I know that people watching are going to be curious about the timing here. What can you tell us about the timing of this decision and how it is expected to weigh on the tenor of the conversation around the Trump campaign throughout the course of this week and moving into November?
The timing is outrageous. She's already delayed a year before dealing with motions, and then to give such a gift to the Trump campaign on the eve of the convention. You know they're going to say this is proof that the deep state is trying to persecute us, that they are bringing baseless allegations against us. And once again, we are standing strong against the swamp of the Democrats and Joe Biden. You know, she has not only put her thumb on the scale of the law, she has put her thumb on the scale of politics. I can't recall. It's very difficult to think of any decision by a federal district court judge in a criminal case that was this outrageous.
Alan, really quickly before we move on, we already know the likelihood of Mr. Smith's team appealing this ruling. What do you think about the potential ability Smith's office has to successfully appeal?
I think there's no doubt they're going to appeal, and I see no reason why the appeal would not be successful. This was a fringe legal theory that, you know, legal authorities thought had no chance. It was put in a dissent by the compromised judge, Clarence Thomas, who's taken millions in gifts and, you know, from billionaires who love this kind of decision. You know, the less we have in the rule of law and the more they can do, the more they love it.
Well, Alan, I have to talk to you about the broad questions that I'd prepped for you before this breaking news occurred here, and that is about the events that transpired over the weekend. Alan, as you know, you are known for predicting election outcomes very close to perfectly throughout your career. How much weight are the events of this weekend, the photos of former President Trump following the assassination attempt. How much is that going to weigh on your final call about who you think is going to make it to the White House come November?
Great question. And anyone who thinks they know instantly what the political impact is going to be, I have a big bridge in my hometown of Brooklyn to sell them. Instant analyses are almost always wrong. You know, after Barack Obama stumbled in his first debate with Mitt Romney in 2012, the pundits said, Obama's finished. They said Donald Trump was finished in 2016 after the Access Hollywood tape. They said Joe Biden was finished after his faltering debate. This does not affect my keys one way or another at this point. There's still a lot to come because my keys are based upon the insight that American presidential elections are primarily votes up or down on the strength and performance of the White House party. In other words, does the party controlling the White House have governed well enough to merit another 4 years? In other words, it's governing, not campaigning, that counts.
I know you don't make your decision until after the DNC. Let's say you and I are talking on September 1st of this year. Who are you picking?
I'm not going to answer that question. I have said that a lot would have to go wrong for Biden to lose this election. Certainly could go wrong. You know, I have never seen so many twists and turns. Can I comment briefly on the assassination attempt?
Yes, go for it.
Yes. As an historian, what I was reminded of is the fact that violence and political violence is endemic in America. And while this was extraordinary in the sense that it involved a former president and presidential candidate, it was as American as apple pie, I hate to say, in terms of mass shootings. This was a mass shooting. We have a mass shooting every single day in America. More than all of our NATO allies combined, far more. The very next day after this tragedy, 7 people were killed in a mass shooting in Alabama. And as an historian, I'm reminded of the fact that something positive could come out of that. From the 1981 shooting of Ronald Reagan, his press secretary, a staunch Republican, James Brady, was grievously wounded. And instead of making political capital out of it, he did bring the nation together to pass the most significant national gun controls in our history to try to deal with this horrible epidemic of gun violence, which is a leading cause of death of our kids.
Alan.
40 gun murders a day in America.
Alan, thank you so much. I really do appreciate you explaining that history, and it's a very important context in terms of comparing that this has happened to former presidents previously. So we do really appreciate that, and I hope you'll come back with us another time to chat more. Thank you so much. That was Alan Lichtman. He's American University's presidential historian. Moving on to another story that we are watching this morning. China's economic growth coming in worse than expected. The country's second quarter GDP rose by 4.7% year on year. That's a miss on expectations of a 5.1% move. Yahoo Finance's Akiko Fujita has the details. Akiko.
Yeah, well, the China's National Bureau of Statistics attributed the slowdown to short-term factors, including extreme weather. But this marked the 5th period of deflation in the second quarter. It is the longest decline we have seen in prices since 1999, according to Bloomberg. And the latest data comes at the start of a 4-day meeting for the Communist Party. It is sure to raise questions about how President Xi plans to jumpstart the world's second largest economy. Now, to be sure, growth is continuing, but at a much slower pace than expected. We saw GDP expand at 4.7% in Q2 compared to the same period last year. Retail sales, a key metric here, saw it slow its monthly pace since December of 2022, with much of that driven by aggressive price cuts that we've been talking about a lot here. Everything from smartphones to cars, all those prices slashed there. China's property crisis has been the biggest drag on the broader economy for years, and we saw a reminder of that yet again with new home prices falling at the fastest pace in 9 years. The largest cities now seeing 13 straight months of declines. Fiscal stimulus has been fairly limited so far. We saw earlier this year China issuing ultra long-term special treasury bonds to spur spending and investments. Xi Jinping, though, has doubled down on manufacturing and the country's high-tech sectors, but that hasn't necessarily led to a big turnaround. Keep in mind, China has publicly stated it plans to reach 5% growth this year. There are growing doubts what that target is within reach, with the latest data prompting Goldman Sachs this morning to lower its growth forecast from 5% to 4.9%, saying more policy easing is necessary, especially on the fiscal and housing fronts.
Akiko, always a pleasure to have your insights. Thank you so much for joining us. Now, coming up, we've got Yahoo Finance's Media Week. Our very own Ali Canal will break down what you can expect us to cover throughout the week. That's coming up next right here on Catalysts. This week, Yahoo Finance is taking a deep dive into the media industry as part of our Yahoo Finance's Media Streaming and Investing What's Next. Our very own Alexandra Canal is here to explain what you can expect. Allie.
Hey, Maddie. Well, you said it. With the Netflix earnings out this Thursday, we wanted to take a look under the hood and answer your investor questions about the future of this industry. Like, how did Netflix become one of the only profitable streaming services out there? Is it possible for other platforms to replicate its success? And what's next when it comes to future growth? But as our many subscription services tell us, it's not all about Netflix. We have YouTube, which has emerged as a streaming wars winner thanks to the popularity of YouTube TV and its creator economy. There's also Paramount Global and the latest on its merger with Skydance after a messy 6 months of back and forth talks. Will the deal receive regulatory approval? And what does it mean for the future of media M&A if it does or doesn't? Plus, the forgotten cable bundle of the past. In other words, is linear TV really dying? And how do sports fit into all of this? No matter what angle you take, it's clear we're in a time of massive disruption, and not every media company is going to survive. So join us for these answers and more throughout this week as we kick off our coverage of media, streaming, and investing. What's next? Right here on Yahoo Finance.
All right, Allie, thank you so much for breaking that down with us. And I know you're going to stick with us right here for our next conversation, because we're going to kick off Yahoo Finance's Media Week with a look ahead to those Netflix earnings that Allie just discussed. Shares of the streaming giant up over 36% so far this year. So what do investors need to hear from the streaming giant come Thursday? For that, we've got Laura Martin, Needham & Company Senior Media and Internet Analyst, joining us for more. Laura, it's always great to speak with you. Look, we know that Netflix has had a couple couple huge breakout quarters, particularly with the password sharing crackdown. What is going to be the next big catalyst for the stock?
So we get earnings this week, and we're really looking for subscriber growth both in the US and the UK. And we really want to focus on where those subscribers are coming from, because the US monetizes at twice the level of most of rest of world. And we really want to see their content spending budgets stay the same at 17 billion, because they announced 2 NFL games in Christmas. Make sure they're not joining the arms race for sports rights for the NFL.
And Laura, I want to pick up on that point about where subscribers are coming from, because as you said, it's more important for investors to have those subscribers in the US rather than abroad. But I do have a two-pronged question on that. One, haven't we reached peak penetration in the US when it comes to those subscribers, or at least getting towards that peak penetration? And two, the fact that Netflix has been able to attract some of those more global subscribers, that's something that competitors haven't really been able to replicate to the same level as Netflix. So couldn't you argue that that maybe is a positive for the stock as well?
Absolutely. You're right about the US. It's completely mature. So it needs to have content to drive people from Paramount Plus and Peacock and Hulu back into Netflix. So we need to make sure their content keeps attracting US subscribers. And then offshore, we like the growth, but we don't want all the sub growth to come from their subscribers in Latin America or APAC to equal 1 subscriber in America.
So then, Laura, when you think about the short-term success here, or the short-term driver for Netflix, obviously we talk a lot about password sharing crackdown, ad tier. Now sports has become more part of the conversation along with live content. In the short term, what do you think is going to be the biggest driver? And is that the same as what investors should be looking for longer term?
You know, short term, I think it's earnings momentum, and long term, I think it's the competitive environment and what these deep pocketed competitors like Apple and Amazon and Disney are going to be able to bundle with their services, and whether they just are willing to take a loss on their streaming service because they have other things like theme parks or an e-commerce business or an iPhone business, and they don't really need profits from streaming. So long term, the profitability of Netflix in part depends on their competitive environment and whether their competitors are willing to take losses in streaming.
Laura, thank you so much as always for joining us. Really appreciate it. That was Laura Martin, Needham & Company's Senior Media and Internet Analyst, and our very own Alexandra Canal. Thank you both so much. We're going to have all of your markets action ahead right here on Yahoo Finance, so stay tuned. You're watching Catalysts. We're continuing to monitor any reactions to the assassination attempt on former President Trump from over the weekend. Just hours after that incident, we had Elon Musk and Bill Ackman taking to X to declare their support for the former president. But otherwise, the reaction has been somewhat muted outside of executives condemning the violence. So here to discuss, we've got William Cohen, Puck News founding partner. William, it's great to have you on here. Obviously, it's a muted reaction from executives who are sticking to the talking point of condemning the violence here. But I'm curious from your perspective, those who have spoken out and confirmed their support of the Trump campaign, do you think they were just waiting for a moment to be able to speak openly about their support of Trump, and this was kind of always in the cards for a Musk and an Ackman type?
I think with regard to those two, both Ackman and Musk, they probably were looking for a way to declare their support for Trump without sort of being attacked for it on social media. And I think this unfortunate incident, we remain in an epidemic of gun violence that never seems to stop, gave them the cover that they probably were looking for, yes.
Well, I do want to talk about what you're anticipating throughout the course of the week here as Trump is heading to the RNC. Do you think the events of the weekend are going to impact his VP pick at all?
I don't think it's going to impact the VP pick. I mean, I think at this moment, the combination of, Biden's poor debate performance, his subsequent attempts to rectify that, and then this horrible incident over the weekend, I think most people now seem to be, although, they're still 4 months away from the election, I think most people at this point seem to be resigned to the fact that Trump is going to win. There's going to be a second Trump administration, and there's not much Biden can do about it, unfortunately. Although, again, there's still a lot of time. Lots of things can happen. But I just think the combination of these two now is there's a resignation amongst many Democrats, most people on Wall Street who are Democrats, actually, and would prefer not to see a second Trump administration. My reading of the situation now is that this just seems like there's nothing much that can be done anymore.
Well, Bill, why the resignation then? I mean, we had AOC, for example, over the weekend saying that if senior Democrats are resigned to a Trump presidency, then they themselves should retire. If you're in a position of power, why not take that power and do something if you're concerned about the future of the country?
No, I'm not talking about the people, in Congress or high-level Democrats or people who talk to Biden. I'm just talking about rank and file Americans, rank and file Democrats, people who, were very hopeful before the debate that Biden would be reelected. I think between the combination of these two things, it's kind of a double whammy on an unprecedented scale. And I'm not sure many people, at least at this moment, look, again, 4 months to go. But at this moment, I think there's suddenly widespread resignation that Trump will be returned to office. I mean, and you see that with, people like Bill Ackman, who have been supporting Democrats for the last year consistently, now suddenly is coming out full-throated for Donald Trump. So, I mean, I think that's going to unfortunately be happening more and more. And it does. I mean, it'll still be close. But I think the electoral map seems to be shifting in Trump's favor, and that's really where the rubber meets the road.
Obviously, you've spent a lot of your career on Wall Street, Bill. I want to talk about the potential market impact. What do you think is the single biggest trade that investors should be watching ahead of November? Is it Bitcoin? Is it the Treasury curve steepening? What do you think is the best hedge against a potential return for Trump to the White House?
I think it's Trump media and technology. Look, the stock is up 33% today. It's obviously a litmus test on Trump and his second administration, what people think he's going to do. I mean, obviously, if you had bought the stock on Friday, you'd be sitting with a 33% gain today. I mean, unfortunately, it seems like it's a litmus test for Trump. And if you want to play the Trump gambit, that seems to be the best way. I mean, I'm not a trader. I don't know how you would do it or what the best way is to do it, but it certainly is one way to play it. And, he's been saying that the reason the stock market is hitting all-time highs is because his prospects for re-election are looking better and better. He just obviously got a great court ruling today. He's probably the luckiest man on the face of the earth. If you look at everything all together, the guy has got incredible, more lives than a cat, I think, at this point. And if you want to play his return in the markets, his SPAC is certainly one way to do it.
You sound like the president mentioning the alley cat during that debate, Bill. Thank you so much for joining us. Really appreciate you. Bill Cohen, Puck News founding partner. Well, more earnings are expected this week on Wall Street with a preview of what's to come. We've got our very own Josh Schaefer here in studio with us. Josh, great to have you as always. Are we still doing the broadening conversation here? Is that the big narrative heading into earnings?
The broadening is definitely the big narrative heading into earnings, right? I mean, when you take a look at how the markets reacted over the last couple of days, Maddie, we've seen significant evidence of that broadening, right? You've had the equal weight S&P 500 outperforming the actual S&P 500. The Russell 2000's been rallying more than the S&P 500. So I think that's sort of the broad trend going into earnings is, other than big tech, will other sectors show earnings growth and perhaps more earnings growth and earnings surprises than expected? That was what Callie Cox over at Ritholtz Wealth Management told me this morning is kind of her number one thing she's watching is, are those companies going to beat and surprise outside of the tech sector? But I wanted to dig in a little bit on just this week and sort of what we're watching this week. So we obviously have Netflix coming out. Netflix, to me, in this last couple earnings cycles, has kind of been a good test for companies that have been outperforming, tech companies that have been outperforming, that sort of have high bars and their stock has already run up a lot. So it's been interesting just to simply watch how investors react to Netflix's report. Netflix can have a great report, but that doesn't necessarily mean the stock gets bid up. And maybe that tells us a little bit about sort of risk appetite with the stock near an all-time high. Are people going to want to drive it higher? Perhaps you saw that maybe a little bit with Goldman Sachs this morning. Pretty good report. Stock's up about 1.5% the last time I checked, but the stock's been ripping, right, over the last month. So that's something to kind of think about coming into this. And then the other two reports that I think are going to be interesting this week is you've got ASML and you have Taiwan Semi. You remember back to April, both of those companies had disappointing reports by Wall Street standards. The stocks fell, and semiconductors actually got hit. That was when Nvidia fell several days in a row in April. The market, it was actually the most recent market bottom, and it kind of was this sentiment scare of, oh no, is the AI narrative in trouble?
Yeah.
Of course, Nvidia reported, and that was not the case.
Right.
So I don't know. It'll be interesting to watch. That's about midweek here, I think, on Wednesday, and it'll just be interesting to watch if that is something that we sort of get attached to again, that narrative of these early chip companies, and does that mean something for the AI trade? Last quarter, it didn't end up mattering. It mattered for a couple days, but when the actual real chip company we cared about reported, it didn't matter. So I don't know if that will perhaps play into it this quarter, but it's certainly in a week of sort of, we're starting to get a little bit busier, but it's not that busy with earnings. I think that might be one of the top things I'm watching.
And we already know that NVIDIA has increased their orders for specific parts of what goes into a chip, right? The wafers, for example. So that's definitely a bullish indicator for TSMC moving forward. And the stock has certainly had a great year. I'm taking a look now at the stock over the course of the past year here for TSMC. That stock is up over 85%. So
another stock that's had a good run going into earnings, right? And sometimes
the bar is high.
The bar is high is the takeaway, I think, going into earnings. Everyone's talking about that high bar.
The bar and the broadening. Those are the two B's for you this earnings cycle, guys. All right, Josh, thank you so much as always for joining us. We really do appreciate it. Coming up, we've got Wealth. It's dedicated to all of your personal finance needs. Our very own Brad Smith is going to have you right here for the next hour, so stay tuned.
Welcome to Wealth, everyone. I'm Brad Smith. We're tracking developing news around the attempted assassination of former President Donald Trump. Taking a look at the U.S. markets this morning, stocks trading higher to start the week. We have a slew of corporate earnings on deck. Some of those has come out this morning, but of course, all eyes continuing to be focused on that assassination attempt on former President Donald Trump over the weekend at a campaign rally in Pennsylvania. You're taking a look at some of the video from that event as it was playing out. Investors are digesting what impact, if any, the attack is having or will have on markets and the election. Now, we've seen moves higher in assets of the so-called Trump trade. Bitcoin rising over the last 2 days, and also shares of DJT are surging here this morning. Earlier this morning, I spoke with Terry Haynes, who is the Pangea Policy founder, about whether or not the rally there would last. Here's what he had to say.
I think there's a great deal of sentiment involved in this, and most likely egged on by betting and prediction markets. And that's fine. I mean, markets trade on sentiment all the time, and those sorts of things. But in terms of long-lasting impact, or long-lasting in markets these days is maybe this week, but long-lasting, I'd really watch out for it, because prediction markets don't bear any resemblance to what's actually going on the ground. The political side of this is pointing at the prediction side as saying this isn't going to last.
Yahoo Finance also spoke to Tom McLaughlin, who is the co-lead for Election Watch at UBS Global Wealth Management. Tom acknowledged the market boost today could be due to second quarter earnings, but also said it could be a sense of relief that the weekend's event weren't worse.
It also could be a little bit of a relief in the sense that it could have been worse. I mean, we actually, sympathy goes out to the families of those who've been critically injured and the individual who passed away. But there's a relief in the sense that what is certainly a bit of a tragedy could have been much worse had the president actually been killed, the former president. So we're looking at a situation where hopefully we get back to a little bit more normal.
Sticking with the 2024 election and the possible impact to markets, we have Matt Miskin, who is the John Hancock Investment Management Co-Chief Investment Strategist. Matt, great to grab some time with you here this morning. I would love to start with just knowing how you're looking at the events from the weekend and in the context of the market.
So we're going into today seeing small caps continue their epic rally. And really, they started rallying on the inflation report, which was going to be a lower interest rate regime. So the thought was inflation comes down, rates come down, that helps smaller cap companies that have greater leverage, lower interest rates, good. Today, we're coming in with a bear steepener. Rates are up and small caps are still ripping. So we've gone from last week being a lower rate, lower inflation regime to the Trump trade, which is small caps and a bear steepener. And that's breaking a key dynamic that had been really embedded in this market. Small caps and treasuries were as correlated as they've ever been in history running up to this. And so we are starting to get political input into markets. We do not see this as sustainable. We do not invest based on politics because it is incredibly unpredictable. And even if you had gotten Trump last time he was president right, the winners of the overall 4 years of his administration were large cap growth, tech, and Chinese stocks, not small caps. And so when you look at history here, it doesn't suggest that this kind of rotation may not get further legs. So we just want to be understanding that it's a trade likely, but overall the fundamentals we think favor more larger cap, higher quality type businesses.
You know, it's interesting, and you started to mention this, the elements perhaps of the Trump trade as you're tracking them. What is the composition of that?
Yeah, it all comes back down to greater deficit spending. And this isn't, whether it's Republican or Democrat, really in the last 8 years, regardless, it's been increasing deficit spending. So that in theory increases Treasury supply, increases Treasury yield. So you've seen the long end of the Treasury yield curve increase. That yield's gone up to 30 years, actually uninverting from the 2-year for the first time in a long time. So that, though, then usually had meant weakness on small caps, weakness on financials. And now the thought is, well, less regulation on small caps and financials. That actually helps those parts of the market. So it's a big change, actually, underneath the hood of the market here. as politics move to more of the front and center as a market driver.
Let's turn to some broader themes that you're looking at this week as well. Inflation, corporate earnings. As I've been continuing to track some of the data that comes out from FactSet on a weekly basis, just thinking about at this very early stage they are of the second quarter earnings season for the S&P 500, it is off to somewhat of a mixed start. And we got, of course, BlackRock, Goldman Sachs here to begin the week. What is the theme that you're expecting to play out over the course of this earnings season?
Yeah, Brad, it's still about winners and losers right now. And as you pointed out, some of these companies that are reported first are higher quality businesses that are taking market share. And they've actually been doing well. And the stock price is already up a lot going into earnings. So, to us, it's going to be a bit of show me something good here. Because it's already in your price. And that's another thing. Broadly, you're talking about seeing this economic data. Last week was soft landing island, grab a drink and chill out market environment. So you had initial jobless claims fall and inflation fall. So you had better economic data, decelerating inflation. That is the best case scenario. And what we're also seeing is, even though there's all this political uncertainty, there's another Fed rate cut now priced into the back half of this year. So the thought is the Fed's going to cut rates 3 times now in the back half of this year. That's actually providing a nice buffer for volatility and likely helping equities as well into this week.
When you talk about winners and losers, are there certain sectors that you expect to continue either outperforming or to finally catch up to the broader trade over the course of this earnings season?
Yeah, we do see parts of the market seeing some catch up. We do like mid-cap industrials. They've seen great fiscal policy support in terms of building out the manufacturing renaissance across the U.S. They're more U.S. focused, which is actually helping their businesses. But in terms of the high quality tech side, for us, it is likely to deliver good results, but it's in the price. And that's also tough because fundamentally you're saying, hey, this is a great business, but look, it's up a lot. It might actually see some selling pressure if there's any whiff of a miss, whether it's forward guidance, whether it's revenue or even the bottom line.
Matt, great to speak with you. Great to see you. Thanks so much for taking the time here with us on Yahoo Finance. John Hancock, Investment Management Co-Chief Investment Strategist, Matt Miskin. As federal authorities investigate the assassination attempt on former President Donald Trump, some experts warn about the potential spread of misinformation online. So, how can internet users navigate this environment, and what role do tech companies have in protecting information? I'm joined by Roberta Braga, who is the founder and executive director of Digital Democracy Institute of the Americas. Great to have you here with us. First and foremost, we think about the aftermath of events like this and how much there is information that is both people who may have been at the event on the ground, there are people who are speculating. So there are all of these things that start to run rampant here. What is the first thought that should come to any internet user's mind during an event like this, and especially given the overlay of what we know to be the unfortunate reality of social media in this day and age?
Well, the first thought should usually be some skepticism, pause. Misinformation, false and misleading narratives really thrive when there are voids in information or facts, or when there's uncertainty about what actually happened. And so the first thing that we recommend is definitely checking your sources, checking your own biases, and making sure that what you're engaging with has been verified in at least 2 or 3 other places. This information really tends to thrive also in polarized environments, organically spreading through, far left or far right spaces online in places like YouTube, X, Facebook. And so if those are the places you're going to for information, definitely making sure that you're verifying it also in more traditional news channels.
What do you anticipate the next few days, weeks in the aftermath, and as some of the conventions begin, may look like across some of these very platforms?
That's a great question. The silver lining, may I say, of misinformation is that nowadays it's actually pretty predictable. A lot of the lies that we see spreading, a lot of the conspiracy theories that we see spreading aren't necessarily new, never before seen or heard things. And so some things we can expect this week. We can expect that as we find out more about the shooter, that there will be misattributions about his motivation, that there will be a lot of speculation about his connections and what drove him to carry out the attack. We can see a lot of demonization and scapegoating happening on both sides of the aisle. Likely we're already starting to see this, conspiracy theories around elites having plotted to execute what happened, either that President Biden was behind it or that somehow he orchestrated it, or that former President Trump and his campaign were behind it or formally or orchestrated it as well. And so I think you always get those blaming of an entire group or ad hominem attacks against a specific person and their character in instances of crisis like this one.
Certainly. And as we think about what role social media companies and the largest internet search engine providers even and communities like a Reddit, what role they all play in identifying disinformation, identifying and acknowledging, many of them have already talked about the risks of AI-generated deepfakes even, and what that may do in swaying this election season too. How are they stepping up? Where do they need to do more? And what is the role that they play here?
It really depends on the social media company. All of the companies have specific terms of service in place, but by and large, they're actioning against behavior and not necessarily against content. And so there's a lot more that can be done both in the identifying of the false information and also labeling it, taking it down, making sure that there's more asymmetry in actions they take against English language content and non-English language content. We study Latinos at the DIA, for example, and so we often see that the companies are not doing as great of a job in identifying and actioning against Spanish language disinformation as they are for English language disinformation. They have a central role to play, especially in lieu of that there not being a lot of regulations in place. And so really they're taking the lead in actioning and implementing their terms. And so at the very most basic level, they should at least do what they say. And I think different platforms do different levels of a great job of that, let's just say.
Yeah, certainly. So on the individual level, how can we be better about spotting even some of the deep fakes, or even just knowing where a conversation is going down a certain wormhole, perhaps, that we need to then be able to access the right resources, as you were mentioning earlier, to kind of spot check or fact check based on the credible sources that are out there?
There are specific tactics that bad actors or those trying to manipulate you online will use, and they get repeated over and over. And so a few of those that we can be on the lookout for: the first, emotional language, the use of emotional language to get at your fears, your anxieties, your hatred, your biases. So always being aware if there's a sensationalistic headline or a claim that's being made that's too over the top, taking a pause, verifying that. Same with scapegoating or cherry picking. So you might hear people using one specific example to generalize about motivations of an entire group of people, being aware when that's happening. And then the last thing I would say is the scapegoating and ad hominem attacks that I mentioned. So just being aware if this seems like too simple of a solution, or if there's too much attribution being given to a specific person or group, taking a moment, making sure the data is up to date, the facts are up to date, and verifying it in different places.
Roberta Braga, who is the founder and executive director of Digital Democracy Institute of the Americas. Roberta, thanks so much for taking the time here today.
Thank you so much for having me.
Certainly. We've got all your markets action ahead. Stay tuned. You're watching Wealth on Yahoo Finance.
It's a jam-packed hour focusing on the biggest movers and shakers on Wall Street.
This is market domination, and here, every day is game day.
We have 1 hour left until the market close.
It's game time for investors to make their final plays.
The clock is ticking, and we've got you covered with our quarter-by-quarter playbook.
We're bringing you in on all the market action,
with step-by-step analysis of our biggest trending tickers.
And expert insight into the day's biggest headlines.
We'll bring you the closing bell and get you to the finish line.
This is
Market Domination. Tune in daily from 3 to 4 p.m. Eastern.
Google parent company Alphabet reportedly in advanced talks to purchase cybersecurity firm Wiz for $23 billion, this according to the Wall Street Journal. Now, if you're an employee of Wiz, or for that matter, any other public company or company that may be in talks to either go public or be purchased, you may be wondering how it all might affect your bottom dollar and your financial future. So for more, let's welcome in Mike Rimac, who is the Citi Wealth at Work Head of Investments here. Mike, great to have you back in studio with us.
Thank you for having me back.
Absolutely. Let's talk about this. I mean, this is a core wealth creation event for a lot of people when they find out that their company is either going public or ready to be sold. What is just the market landscape looking like right now for companies set to tap the public market?
In terms of the market landscape, we're seeing very promising trends both in equity capital markets or the IPO market as well as M&A. We're seeing a big pickup this year in both areas, and we do think that's going to continue. There are a number of reasons for that. I mean, number one, we went through a long period without a lot of deals, and so there's a tremendous amount of pent-up demand. But we also know that CEOs and companies like to see sustained periods of a strong stock market and low volatility to feel confident that it's time to come to market.
And so for the other side of that too, say your company is about to be acquired here, because that is what really caught our attention here this morning, when employees are also about to have a wealth creation moment, not as a result of going public, but because another larger suitor says, okay, we see a way to make this business accretive to ours. And so within that, there's also that wealth generation moment for a lot of those existing employees at the smaller company or the acquired company.
Absolutely. And for many of those employees, that wealth inflection point may be the most significant that they see over their careers. And so I think it's important to really understand the facts and circumstances. So take, for example, an initial public offering. It's normal if somebody's been working for a private growth company and working away for a few years, that you see that light at the end of the tunnel, that you can unlock some of that equity, have liquidity, be able to diversify. But there are some major considerations. For example, there's almost always a IPO lockup period, which is typically 6 months. So for one thing, ensuring that investors understand when they can get liquid and how they can sell their shares is really important.
You know, for a lot out there that are wondering, okay, if my company goes public via a traditional route or gets acquired, how soon should I be expecting to tap into some of that liquidity as well? What is that range like? I mean, we're talking about the expiry period, which of course, as you were mentioning, about 6 months after the IPO, but then where should you expect, if your company is acquired, how liquid that could be? Because it comes down to the settlement too of that deal.
It really comes down to the deal terms, and each deal is different. And obviously, some of these acquisitions are in cash and others are in stock. But I think the main thing, again, is understanding not only when you can sell your shares, but also thinking about considerations such as taxes, right? Because when one does eventually liquidate that company's stock, you are going to have to pay capital gains. There are some ways that you can mitigate portions of that. Another important consideration, I started in the business in the late 90s in San Francisco.
Oh, wow.
So I was front row for the tech bubble. And I talked to a lot of investors during that period of time who had liquidity events, and they were reticent to diversify. They would say, I created my wealth through my exposure to this company. Why would I want to diversify that? And we know that, in a lot of those cases, the stocks went to zero. And it's important to consider, taking some chips off the table, not having all of your eggs in one basket.
Is there a correct kind of rule of thumb to think about when you do have that wealth creation moment? How much you perhaps are putting towards maybe a vacation, how much you're putting away for, just a rainy day fund, and then how much you might be investing for long term? And how does that rule of thumb, how have you seen people successfully execute on that rule of thumb as well?
Look, I think most investors would be well advised to the extent that their company stock is a significant portion of their wealth, to ensure that that does not represent more than 50% of their total portfolio. And even that would be a very aggressive bet. So I think one of the things that we always recommend is to take a balanced view. If an investor does have a bullish long-term view on their company, number one, they're going to participate through their employment. Number two, you can have a plan for systematically diversifying over time. And let's remember that the broader stock market, the S&P 500, tends to double about every 7 to 10 years. So diversification doesn't mean that you're necessarily taking all of your chips off the table.
It's great to see you back here in studio, Mike. Thanks so much for taking the time.
Thanks for having me.
Appreciate it. Everyone, coming up, we break down how to save money on your car insurance. That is right after the break. Stick with us.
Ever wonder why a stock suddenly drops double digits?
Or Bitcoin unexpectedly hits record highs?
We're unpacking the catalysts driving daily market action
and explaining the chain reaction.
Why are oil prices trending lower despite ongoing geopolitical tensions?
Or why a company's stock is up even though it missed on earnings. Insight from top strategists, economists, and business leaders will help you make the smartest choices for your portfolio.
This is Catalysts.
Tune in daily, 10 a.m. Eastern on Yahoo Finance.
Burberry shares are falling sharply this morning. The luxury company issued a profit warning and announced it is halting its dividend. Burberry also replacing its CEO. The company named Joshua Schulman as its new chief executive, replacing Jonathan Akeroyd, who is leaving the company immediately. These developments come amidst consumers tightening their belt and foregoing some luxury goods, but not all. There is a bifurcation amongst the luxury sector here, we should note. For expensive luxury brands like Hermes are bucking a wider industry trend here, while lower tier brands, like Gucci and Saint Laurent, seeing a similar slowdown as Burberry. Many companies citing the slowdown in China impacting the sector as a whole. We'll have to wait and see what's next for the sector here, but of course there has been a little bit of moderation, even among the high-end luxury, it seems, based on this trading update we'd seen from Burberry. We're also tracking June retail sales are expecting this week. And for more on what it could tell us about the state of today's economy, we've got our very own Josh Lipton here in studio with us. Hey, Josh.
That's right, Brad. So the most important economic data release this week is likely going to be that June retail sales report, providing us, of course, with another important read on the American consumer. Now, economists predict U.S. retail sales drop 0.2%. Ex-autos retail sales are predicted to rise 0.1%. Heading into this report, there are signs that some American consumers we know are feeling stretched. Just for example, Helen of Troy is a consumer products company, parent of well-known consumer brands like Revlon, Vicks, and Braun. That stock got hit hard when they recently reported financial results, with the CEO saying the macro environment and the health of consumers and retailers has worsened. Consumers are even more financially stretched and are even further prioritizing essentials over discretionary items. And in response to that report, Peter Bukvar, Chief Investment Officer at Bleakley Financial Group, telling his clients, "I'm sorry, but this is nothing but consumer recessionary type language." Then there was PepsiCo, which also recently reported earnings results. PepsiCo executives saying the impacts of persistent inflationary pressures and higher borrowing costs over the last few years have resulted in tighter household financial conditions. So there are signs of consumers facing challenges, but Seth Carpenter, global chief economist at Morgan Stanley, telling Yahoo Finance the picture is nuanced.
The upper end of the income distribution absolutely still spending, especially spending there on services. And I think that's part of what's going to keep the economy chugging along, why we can slow without crashing. And so it'll be a fractured consumer. The bottom end of the distribution, you see delinquency rates drifting up a little bit. Their wage gains have slowed down compared to where we were a year ago. So definitely some slowing, definitely some spread in the distribution, but I don't think we're at the point where we're looking at the consumer just coming to a halt.
All right, so bottom line, Carpenter reminding us there that there is not one American consumer. Of course, there are in fact many kinds of consumers, and they're being impacted by elevated inflation and higher borrowing costs in very different ways right now. Brad, back to you.
Yeah, I mean, as we think back to just what the University of Michigan survey of consumers told us last week in that consumer sentiment reading that did slip month over month and a year over year change of a little more than 7%, nearly half of consumers still objecting to high inflation rather, and then ultimately here looking at inflation to continue moderating in the years ahead. A larger question of where that will start to show up in some of these future readings too. We'll see if retail sales is the jump off point for that.
Yeah, we'll be watching close. I mean, inflation's one key part, Brad, but then you think about higher rates too. I mean, you're trying to finance the purchase of a new appliance or a car. It can sting.
Yeah. All right. Gotta kind of decide if I'm going to take advantage of some of these sales for Prime Day week and all of the adjacent tangential.
Just do it. Just jump in.
I haven't told you that I have never bought anything on Amazon.
Really?
Yeah.
Ever? Nothing?
I love seeing the candid reactions
That's
sometimes.
Incredible.
Yes.
Man.
We'll take this
I know,
offline.
is that impressive? I don't know what to make of it. I mean, the Lipton household basically bankrolls Amazon at that point. That's how much Amazon comes to us.
It's perplexing to
we
many
can learn
people.
from you, Brad. That's what I'm saying.
Good. I'm a case study. Thanks so much, Josh. Much more on wealth after the break, everyone. You're watching Yahoo Finance. Prices for car insurance increased over 19% compared to last year, according to the Bureau of Labor Statistics. And nearly half of consumers are actively shopping around for a new plan, according to a J.D. Power study. To discuss how you might be able to save some cash, we've got Shannon Martin, bank rate analyst, here with us. Shannon, great to see you here. A lot of people looking to ease some of those costs, but what is the reality as of right now within this market for car insurance?
Right now, the reality is that people are struggling to make their car insurance payments. Things have gotten really expensive. You do want to do what you can to shop around and compare rates, but keep in mind you might not save as much now as you would have in the past few years.
What is the biggest input that's driving prices for car insurance higher right now? Is it wages? Is it getting the actual parts and equipment? Because there's a few things that are inputs into the overall expense basis for a lot of the servicing that needs to take place in the insurance business.
That's absolutely right. Right now, the cost of motor vehicle repair is about 45% higher now than it was before the pandemic. So that is a real significant driver in the cost of car insurance. You also have to look at extreme weather. There's just a lot of factors that happen. There was also a 10% increase in car crash fatalities that occurred in 2021. Now, the car crashes are still higher. Fatality rates are still higher now than they were before, but they have started to come down recently by a little over 3%.
You know, it's particularly interesting as we think about insurance claims, and you mentioned some of the events that are driving more of these claims to come through. Has there been a major delta or a major change in the approval process for claims and how much people are actually getting paid out?
What's really interesting is with the cost of parts and labor being so much higher, policyholders are now actually having their vehicles totaled at a sooner rate than they were before. So there's not necessarily a change in how claims are being paid, but because the value of the vehicle might fall below how much it costs to repair the vehicle now, you might not be able to keep your vehicle. It might end up being totaled, and you receive a claim check that you need to put towards purchasing a new vehicle.
How is insurance cost playing into the mindset of those who are trying to weigh the decision of whether or not to purchase an electric vehicle even?
Electric vehicles currently are still priced higher than your standard vehicle. So that is something that most drivers and policyholders should keep in mind. My best advice for anyone who's even thinking about purchasing a car is start with your insurance budget first. Get full VIN numbers from different dealerships, get quotes from agents so that you know what car falls within your insurance budget before you head down to the dealership.
In terms of the data that is taken in by so many vehicles, electric or standard combustion engine vehicles, or internal combustion engine vehicles, I should say, there's more data than ever before because of the technology that's integrated into vehicles. How can drivers also make sure that they're leveraging that data to get better rates on their insurance?
All of us are still fairly nervous about how much data insurance companies collect from our driving habits. Many drivers are looking into taking advantage of telematic discounts, but they do collect data on not only where you're driving, but what time of night that you're driving, your brake patterns. So I would speak with your agent, make sure you're comfortable with the level of data they're acquiring. And some people are also looking at low mileage plans where if you're driving less than 4,000 miles a year, you might save money because you aren't driving too much, but those insurance companies are collecting that data as well.
Shannon Martin, bank rate analyst. Shannon, thanks so much for taking some of the time here today and for these very valuable tips as well for some of our viewers. Appreciate it.
You're welcome.
We're halfway through the year, a good time to reconnect with your family and your money. Check your bank accounts, investments, and plan for the second half of the year. Our next guest has some tips for 3 areas of your life: vacations, the new school year, and home improvement projects. Here with more, we've got Andy Esser, who's the Edward Jones Financial Advisor. Andy, let's just start with the sexy part. Let's talk about vacations, because there's still people going on trips, planning for trips, trying to figure out, okay, how much do we spend while we're on the trip? How much do we spend for the trip itself and booking it? What is the thought process that people should begin with and then make sure that they're tracking all the way through the execution of that lavish vacation?
Brad, thanks for having me. It's an important time. It's a busy time right now for people who want to be maximizing the time with their kids and also their families. And what we try to do is help make sure people have their short-term priorities match up with their longer-term plans. So what I advocate for my clients is I'm working with them as they want to maximize either vacations or home improvement projects or even education is a three-step process. One, it's to make sure that you're clarifying what your goals are. How important is this project that you're looking to take advantage of? And finally, make sure it also lines up with your vision. Is this something that you really want to be looking at taking those steps, be it, I think in my family, for example, when we go on vacations, we always want to make sure that we hit the right points of interest, that it's educational for our kids. It's my wife who typically finds those the options that we want to work into the plan. It's up to me to make sure that the dollars are there. So the final step is to make sure it aligns with your budget and it doesn't displace your progress towards your other financial goals.
When in your thought process, and how do you know when you're spending too much on vacation?
It typically comes down in the heat of the moment. Anybody wants to just lean in and get that maximum satisfaction. Sticking to a budget is all about having the plan. You've got the plan for the things that you want to accomplish. The least you could do is make sure that you stick with the plan for the money that makes this happen, not just this vacation or this home improvement project, but to make sure that it comes together with your other priorities. So we try to help people make sure that they remind themselves of that, make sure they're not spending too much, and just sticking to that budget by knowing what the dollar amount in mind is and say, you know what, maybe next time.
All right, sounds like I'm holding off on that Alaskan crab. Let's talk about new school year. We're edging closer to August, and what's old is new again. A lot of students don't want to hear this if they're enjoying those vacations right now, but of course, a lot of families trying to plan and think about that. What is the thought process that a lot of households may be working through right now, and how can they get a jump start on making sure that they're aligning their finances with the next school year?
Yeah, we want to make sure that we align their short-term priorities with their longer-term plans. And a lot of folks, kids are getting older, not younger, and a lot of families are looking finally to have not just school supplies be the budget item that they're looking at, but also tuition expenses. This is the ample time to do a mid-year course correction if you have kids who are college-bound or maybe even private school-bound, to make sure you're leveraging something like a 529 college savings plans. A lot of states have them. A lot of state-specific plans can be right, but working with a financial advisor can help you to make sure that you're getting the right flexibility, the right investment choices, and the right protections in place on those dollars to make sure that either this current state plan works or that there might be another plan that's more advantageous. Edward Jones recently did a survey. We found the majority of Americans, 60%, don't feel like they're saving enough. So working with an advisor to help make sure there's room in the budget for those education expenses is what we're all about.
What is the return on investment, especially for higher education, that people should be thinking through when they are getting ready to pay on a college education or continuing college education?
We went through this scenario in my own household. My wife and I, we met in college. We were college sweethearts. She went back to school for a nursing degree because her initial college degree wasn't aligning with what her interests were. There is that fine line and balancing act of, is it worth the investment? It's going to vary, not just based on the income that you might receive coming out, but more than that from the fulfillment and the return of life index on that. The more important thing is to make sure that you've got the room in the budget to help make sure that the tuition bill doesn't pose an unexpected surprise at the downside.
Finally, while we've got you here, Andy, we still have a lot of people staying in their homes due to high mortgage rates. So if you're looking to spruce things up with some home improvement projects, what should you consider financially?
Yeah, a lot of people spending time to increase their either square footage by adding on a room addition or by doing some sort of home improvement. It's not so much the improvement that's the problem. The problem is on the other side of that because you do have increased homeowners insurance costs. This typically you can resolve this by working with an insurance broker to make sure you've got the right coverage in place for what your house actually is. But what you also need to consider is working with a financial advisor to make sure there's room in the budget for the increased cost of coverage from that. So whether it's that, making sure that there's also disability insurance in place for unexpected things come up. At Edward Jones, we have 19,000 financial advisors across North America, and we help people connect with their priorities and their budgets all the time to make sure their short-term priorities match up with their long-term plans.
All right, I'm already putting within the floor plan some type of virtual simulator so I don't have to do the DIY project later on. Added value, that's all I'm trying to do here, Andy. Andy, thanks so much for taking the time here. Andy Esther, who is the Edward Jones Financial Advisor. Thank you.
Brad, thanks for having me.
Certainly. Want to switch careers? You're not alone. We break down what you need to know before you take that leap. That's right after the break. Well, it's summertime and more than 80% of Americans are planning to travel, according to a survey from The Vacationer. And according to NerdWallet, 1/5 of travelers plan to go into debt for vacations, but we want to help you avoid that and figure out how you can save a little money or earn rewards using travel credit cards. Here with how to pick the best card to deploy for yourself, we've got Yahoo Finance's Kendall Little. Hey, Kendall.
Hey, thanks, Brad.
Absolutely.
Yeah, so when you're looking for a credit card for your vacation, we like to think about it just like any other credit card. You know, make sure it fits your budget, it fits your spending habits. The first thing that you kind of want to look at is going to be that welcome offer, because you're going to be spending some extra money on airline tickets, on hotels, and all the things you're doing while you're traveling. You might be spending some extra money. You've probably saved up some. So this could be a great opportunity to get those hundreds of thousands of dollars in rewards value when you're getting that welcome offer. And then, of course, you're going to want to look at your rewards. So maybe you'll go all out and get a premium travel card, 5x or more points on airline and hotel rewards and rental cars. But you could also think about something like cash back, where you're saving money on the expenses that you're incurring while you're traveling, things like dining out, tourist attractions, even gas stations if you're driving. And then you also want to think about those extras. So something like no foreign transaction fees is a great benefit if you're traveling abroad. You can save anywhere from 1% to 3% on each transaction that you make internationally. And then things that can help protect you in case anything goes wrong. So busy travel season, we might see delays, we might see cancellations. Rental car insurance, baggage delay insurance, travel cancellation or interruption insurance is really going to help you against any of those things that could go wrong.
It's a jam-packed hour, focusing on the biggest movers and shakers on Wall Street.
This is Market Domination, and here, every day is game day.
We have 1 hour left until the market close.
It's game time for investors to make their final plays.
The clock is ticking, and we've got you covered with our quarter-by-quarter playbook.
We're bringing you in on all the market action.
With step-by-step analysis of our biggest trending tickers.
And expert insight into the day's biggest headlines.
We'll bring you the closing bell and get you to the finish line.
This is Market Domination.
Tune in daily from 3 to 4 p.m. Eastern.
Gen Z switching jobs at a 134% higher rate this year than they did back in 2019. This is according to LinkedIn data. Don't come at me, Gen Z. And the creator economy could be worth $480 billion by 2027. That's according to Goldman Sachs. To discuss what it takes to pivot into the content creation industry, let's bring in Nisha Shah, who is the social media money expert and accountant, here with us on the show. Great to have you. All right, so first, let's start on the first point here that we mentioned about the number of Gen Zers that are able to have a career pivot and perhaps generate even more money. What is that the core driver behind this, or is there something else at play?
I think the idea of turning into creator or changing careers to do something for yourself, there are so many benefits from it. I've done both working for someone else and also working for myself, but there is nothing like having the freedom to create, produce, design with complete autonomy and freedom, and not having someone to give you an approval before you can do something.
How do you need to, if you're effectively pulling off this pivot or transition or, even side hustle, what do you need to keep in mind as you're getting that started off the ground, whether that be making sure that you're registering correctly as either an LLC or a sole proprietor? What is that thought process that people need to be cognizant of?
I think when you're first starting off, you probably wouldn't make money straight away. So the most important thing is to try and get your business off the ground by giving it 100%. And then once you've got the income coming in, then you can set up your business accordingly to best structure it so that your finances are tax efficient as well.
Certainly. Okay, and so now as we're talking about the creator economy, what is the inflection point that's really taking place in front of our eyes at this juncture, and what's doing well for creators?
When I started going into the creator world and thinking about what I could leverage, and I think what's worked with a lot of other creators is looking at their origin story and saying, okay, what do I have that I could teach other people about that may not be easily accessible? And it may not just be knowledge. It may come from your upbringing and the obstacles that you've come across. It may be from what you've surrounded yourself just by way of osmosis. It might be what you're learning through your day job and the experience and the skills that you've learned through your day job to then teach other people. Everyone has a mountain of value that they're sitting on. They just might be too close to it to really see it. But when you take a step back, and within all of those things that I just mentioned, you could find your unique selling point and create content that can help and inspire and educate other people through doing so.
It's particularly interesting, and I was having a conversation over the weekend with someone who does some creating on the side about how much they need to keep tabs on what the algorithms are doing to maximize their own output. How much and how well do you need to be able to prioritize what the algorithm is really telling you about the performance of your content, how that's able to be monetized, and understanding some of the different kind of undulations of where it's going to prioritize you in search or in explore versus some of the other accounts that are out there?
Yeah. So I think of algorithm just as value. I replace the idea of an algorithm as people who are interested in your content. So whenever I've approached content, whether it's on Instagram or my YouTube channel, it's not the algorithm that's dictating it, but it's the people behind it that are going to dictate, or the way they engage with your content is going to dictate how well it does. So instead of focusing the algorithm, I would say, okay, how can I create the most value possible and make it in the most entertaining way that I can? And then once you see what's working, then you double down on the same concept again and again, and then draw in different concepts or different ideas into that as well.
How do you turn something from the margins of your time into the main creator of wealth for yourself?
What do you mean by that?
Something that you begin doing perhaps on the side. Perhaps you got a main gig, you got your full-time job, and then you have the margins of your time. How do you effectively turn what you're doing in the margins of your time into that main gig?
I would ask yourself, with what you're doing, how can I apply leverage to make this bigger and better? We tend to think of how do I trade my time to scale, and we very rarely ask yourself, how can I use leverage to scale? So by that, I mean, how can I double down on my skills by not trading my time? How can I leverage my network? How can I leverage my passion? How can I use media to scale what I'm already doing to reach more people? And by doing this, you're unlocking more opportunities and growth opportunities to turn your side hustle into a main hustle.
Nisha Shah, who is the social media money expert and accountant here. Thanks so much for taking the time. Valuable tips for sure. Appreciate it.
Thank you for having me.
Absolutely. Hey, let's do a final check of the markets. We're taking a look at the Dow Jones Industrial Average. Take a look at our ticker on the bottom of your screen. Ooh, it's nice today, folks. We got that running for you throughout the rest of the day as well. You've got the Dow, the S&P 500, and the Nasdaq here in this U.S. markets board front and center on your screen. You're seeing gains across the board, fractional as they may be. Good way to start the week, no doubt. That's it for Wealth, everyone. I'm Brad Smith. Thank you so much for watching. Guess what? You can stay tuned for Market Domination. That's coming up 3 p.m. Eastern Time with Julie Hyman and Josh Lipton. They'll count you down to the market close. You do not want to miss it.